Hello everyone. So, for the past year, the narrative around RBI was all about easing. But as we move deeper into 2026, the winds have shifted. The rate cut cycle that defined 2025 hasn't just paused, it's likely over. Today, we are analyzing why RBI is shifting from a policy of support to a basis of tightening. To understand this shift, we have to look at inflation. Throughout 2025, the RBI slashed rate by a total of 125 basis points, including a final cut in December. But the geopolitical landscape in West Asia has changed the map. Surging energy prices have brought imported inflation back to the front foot. Market expectations of India's 2026 inflation have jumped from 3.9% to 4.6%. While this is still within RBI's 2 to 6% tolerance band, the direction of the risk is clearly upward, fueled by a volatile global energy markets. The second major pillar for the pivot is the Indian rupee. After losing nearly 5% of its value last year, the currency has already slid another 4% in the first quarter of 2026. A weaker rupee is a double-edged sword. It makes import competitive, but it's dramatically increased the cost of crude oil imports. This affects pass-through means domestic price rise simply because the currency is weaker. To defend the rupee and anchor inflation expectation, the central bank can no longer afford to focus solely on growth. So, what does the new RBI outlook looks like? Swap markets are no longer pricing in cut; they are pricing in a squeeze. The conscious is shifting toward 50 basis point hike in the policy repo rate. This isn't just about cooling the economy. It's strategic move to counter currency depreciation and stabilize capital flow. The easing basis, as we saw in December, has been replaced by a tightening necessity as the current account deficit widens.
Oh my God.
So, the RBI is moving into defense mode. With inflation rising and rupee testing new lows, the focus has shifted from stimulating growth to preserving stability. In 2026, the cost of borrowing is likely going up and the markets are bracing for impact. Thanks for watching.